Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Welcome back to the podcast Become Sensible. We get our coffee strong, our numbers straight, and our tax game higher than anything that we ever think about. Today, we are having a deep discussion about a topic that most entrepreneurs like bassist. That is about when you set up the LLC. Anytime that you think about start a business, or you think about like how to have a structure that have the benefit for your tax situation. So now here's the tea. Just having an LLC doesn't mean that you are fully protected. It's just like a designer trend clothes on and you forget to button it up when it's raining outside. You might look put together, but you just get soaked up with the rain. That's the mistake business owner make with an LLC. And that's the kind of quietly cost your money, control, or your peace of mind. Let's go straight to the point today. Let's dive in. So the mistake number one is in the operating agreement of an LLC. Many business owners make the mistake just have her as a member managed. And it's very confused between member managed and manager managed. It's very easy to understand in this way. You say, member manage, it means that you give the authority to manage, to make the decision, to control your business to the member in the LLC. If you have a single member LLC, which is only you, that's easy. But if you have multiple members in the LLC and you have a member manage, it would be like every member have the right, equal right to manage and control the LLC. So it should be having as a manager manage, which is like anyone who assigned as the managers will have the abilities and possibility to make the decision. Of course, you always have a board meetings or member meetings, but the one who was assigned in the manager's position should be the person have permission to make the decision for the LLC. Especially if you have a multiple member LLC, this is where you need to be like very careful in how you do it. And the mistake number two is operating without a business bank account connected with your EIN number. And I can say this, it looks very simple, but it very silly mistake can be a costly mistake too. Like so many business say, okay, I have the idea, I start a business and let up the LLC and let run the business and get started. And they forget to have the fundamental thing is open a business bank account and credit card. And also sometimes they say, okay, just open it and then they apply for EIN later. But this is very costly mistake because you basically miss your personal finance with your business finance. That is piercing the protection of an LLC for you. Number three, let your operating for distribution. So in your operating agreement, there is a thing called require profits to be distributed every single year. And that line is a very simple thing. But in fact, that's what make you like, if in sometime in your personal situation, you have a dispute situation or legal situation, and the LLC, the business itself, need to be distributed every single year, that just means that you get the money into your personal bank account, and that while you face with the problem of your personal legal situation, that it would be like a disadvantage for your situation because now you have assets. And it can be used against in your personal case. So make sure that you have the legal discretionary distribution. So it means that you have the authority and the way that whether you make the decision to get the money go out or not. So that is the control of the decision of your LLC distribution. Number 4, is not knowing how your LLC is taxed. So LLC is just a limited liability company and can be taxed in many different ways. It can be an S corporation, it can be a partnership, it can be a C corporation. So you need to know which tax form your LLC will be taxed, because with that, it have a different tax deadline, it have a different tax consequences, whether how to treat your distribution, how to get your salary, how any distribution would affect the tax from the LLC or from your personal tax situation itself. For example, C corporation is taxed on the corporate level, and an LLC can choose to be taxed at a C corporation. And it can be it pay tax on a corporate level anytime that you make the dividend coming out for yourself. For example, you say every quarter the dividend for me is $20,000. That $20,000, when it make the dividend to your personal, you need to pay tax on that. This is called double tax. So tax on the C corporation and tax on your personal for the distribution. But the C corporation itself, the net profit doesn't flow into your personal return at all. So it files separate and it never have a K1 into your personal return. So that's the number 2 in C corporation. But if your LLC is taxed as an S corporation, it will issue a K1 and it will flow into your personal return. S corporation doesn't pay tax itself. Any distribution in S corporation to you is not taxable event unless it's over your basic in the S corporation at all. So if you want to learn more about S corporation, you can listen to other podcast episode that I have previously mentioned about how S corporation and how distribution at the business owners should be considered very carefully. The mistake number 5, when you buy a property, you not set up an LLC. So unless you buy it for yourself, nowadays many people actually, even their own house, they set up the thing called a land trust so that it's not disclose their personal information. And they also have some other benefits in terms of tax. And when in the event that if they pass away, that is one of the other things. That is for your residential. But if you buy the house or property to have is a rental property, you should establish it as an LLC. Why? Because in the future, if you sell that property, you can use the tax rule. It's called 1031 exchange. You move the capital gain from one property and reinvest into another property. That helps you to avoid capital gain tax. So many people, they wouldn't know this. They'll buy it under their name and they never have the LLC on the settlement sheet. So when they sell it, it's not the 1031 exchange only works in the situation that is a business transaction. So it's exchange from one business for another business. This means the IRS, they support for reinvest into the economy. So that's then you can exclude for the capital gain. But if you don't use it under your personal name, they treat this as not a business exchange at all. Therefore, you need to pay for capital gain tax, which can come up with $50,000 or $100,000 in tax bill. Mistake number 6, no officer appointment provision. If you are the only person in the single member LLC, you have an officer named like president or CEO. And when you sign the contract with other in the business, you can sign it as the CEO or president of the business. But if you don't have the title, and I think normally when you call into the IRS, even a very simple thing that you call into the IRS and you want to confirm on S corporation or C corporation, they always ask you in terms what is your title in the business so that they know that, okay, you are an officer that has authorized to discuss about the business situation. So make sure that you actually have a title in the business. Mistake number 7, not knowing how to reimburse yourself properly. Okay, so this a very tricky situation in the way that if your business become an S corporation, for example, you can basically reimburse yourself if you use your home as a home office and have a dedicated room for the work that you do. It's not applied. I think it's not applied for the office, for the business that actually have an outside home physical office, because at the end of the day, you only have one place, claim and primary office that you will perform the business. But like, for example, if you have a home office, you actually can reimburse. You don't have an outside location. You can reimburse yourself in terms of home office expense, reimburse for other expense that help you to maintain your business at home. You also can use this for Augusta rule. That means that you rent your home for the business purpose, like for a party, for year-end party, for meeting potential clients and customer. Those things you actually can reimburse it back, but you don't need to pay for the rent because it's the rule that give you like certain how many days, like I think 14 days per year that you don't need to pay tax on the rental income if you do that way. And mistake number 1, that's not knowing the right tax form. LLCs, your LLCs is a business, that means tax, and not knowing which tax form showing up is like a very awkward situation. Here is a cheat code for you. So if you have a multiple member LLC, you will tax at a partnership, and tax form is a 1065. If you start an LLC, you need to apply for EIN. If you have a single member LLC, you will be taxed in the Schedule C. If you are sole proprietor, single member LLC. If your business is multiple member LLC, it's taxed as partnership, and it will issue the K1 for you to file the tax return on your personal. If you do tax at an S corporation, it will file the form called 1120S, issue the K1 into your personal return. If this is a C corporation, it will file the form 1120, and any distribution for you is called dividend, and it's be taxed on your personal return. And if you have an employee, unique W-4 form, and you issue them W-2 at the end of the year. If you have a contractor, you get them W-9 form, and you issue 1099 at the end of the year. So I hope that this is actually helpful for you. And I hope that this episode, not too overwhelming for you. And we are here to help you with your tax, make your finance and tax is so much smooth and easier to understand. And I hope this episode, you like it, you subscribe and share it, and send it to your friends who actually apply, file their LLC on the LegalZoom, and never actually looked at these things, because I actually have a tax client that's filed their partnership multiple member LLC to LegalZoom, and now they face the situation that their partnership is actually apply on the IRS as a single member LLC. That is not matching in terms of document at all, because if you are partnership multiple member LLC, you need to file an EIN that have a partnership tax return, but they file it as single member LLC. Sometimes inexpensive and convenience is not mean that it will be correct. And then apparently they file through LegalZoom. So until next time, stay sensible, stay fabulous, and remember, profits is something that we aim for. And of course, many of us will say, okay, we reinvest into the business, we do this, do that. That is okay. But at the end of the day, without the profits, you will not have enough money to grow the business long term. So I hope that this episode actually very helpful for you. And thank you so much. Until next time. Bye-bye.